Hello everyone, welcome to my YouTube channel. So let's continue with our total income lectures. We are solving total income sums which are under paragraph form, which generally comes in your examinations in question number 1. Alright, both inter as well as final students can take benefit of this total income lecture series. Alright, let's start everybody. Friends, whenever we are solving sums, any type of sums, any subject, we should always read the first paragraph and the last paragraph first and identify as to what are we supposed to compute. So we are going to do that same thing in this question also. Miss Nandini is engaged in the business of manufacturing of plastic bottles. Friends, whenever you read Miss, Mr., Mrs., then it means the question is belonging to an individual. This is something which is very, very important. Should always first identify the type of SAC. Manufacturing. So there is a very high possibility that something may be related to additional depreciation is also there in the question. So individual, additional depreciation, two things which we have found out from the first paragraph. Her profit and loss account shows a net profit of rupees 6 lakhs for the year ended 31st March 2026 after debiting and crediting the following items. So friends, in the first paragraph, whenever they give you the information, it is very, very important to identify whether they have given after debiting or crediting, or whether they have given before debiting or crediting the following items. All right, this is something which is very, very important. Now here they have said after debiting the following items, debiting and crediting the following items. So it means the items from A to F are either debited or credited. Now we have to apply our common sense. After reading the sentence, we have to understand if it is an expense, then definitely it must have been debited. And if we read and we find out that it is an income, then it must have been credited. All right. So this is the information which we have been able to analyze from the first paragraph. But friends, still we have not been able to understand what are we supposed to compute. So after reading the first paragraph, we should also read the last paragraph. Now the last paragraph says compute the total income as per default tax regime. All right, whenever they say total income, so this is not gross total income. Whenever in the exams they say total income, it means this is net taxable income as per default tax regime, as well as shifting out of section 115 BAC. So it means what I have done is over here I have selected a sum in which we are supposed to solve as per both the regimes. Friends, you must have seen my first lecture of the total income series. In that sum, what I did was I kept the sum only as per one regime. But now purposely so that we can do, practice of different types of sums, what I have done is over here I have kept both the regimes, default tax regime as well as the shifting out of 115 BAC. So let's start everybody. Total income, so it means we are not supposed to compute tax liability in this question. So let's start. Now the very first point is 8,000, 9,000, 8,000 was paid in cash on 15th October 2025 by 3 separate vouchers to a custom contractor who carried out certain repair work in the office premises. Now friends, to the same person, one contractor, on the same date, yes, by 3 different vouchers, but same person on the same date related to a same expenditure, they have made cash payment of 8, 9 and 8. So friends, this is payment of more than 10,000 to the same person on the same date relating to the same expenditure. So friends, obviously the payment must have been debited, because when they say paid, then it means it is an expense and it must have been debited. But as per section 40A3, if you pay anything more than 10,000 in cash, then it is not allowed. So we have to aggregate this. So aggregate is 25,000, more than 10,000, not allowed. Next adjustment. Now this is something which is very, very important, and nowadays institute has started asking such adjustments a lot. So this is very important, friends. One-time license fees of rupees 10 lakh was paid to a foreign company for obtaining a franchisee on 1st of July 2025. Friends, always remember, we have studied, we have read that after debiting and crediting the following items, the one-time license fee paid. So it means this is an expenditure. So always remember, income, expense, chapter 6 reduction. Whenever you are reading the information, divided between income, expense in chapter 6 reduction. So over here it is an expenditure. Now friends, this is very important. Why this is very important? Because friends, one time license fees for obtaining a franchisee, this is an intangible asset. Intangible asset is in the definition of fixed asset. If you remember, intangible asset, building, furniture, intangible asset, and all others, which is plant and machinery. Now, an intangible fixed asset has been debited to the profit and loss account. This is a capital expenditure. For capital expenditures, entire amount is not allowed as a reduction. It should not have been debited to P&L. It should have gone to the balance sheet, but now it is debited to P&L. This is not allowed. So friends, when entire amount is debited to P&L, so what happens is this has become a very common adjustment nowadays with the institute. Building was debited to P&L, furniture purchase was debited to P&L, machinery purchase was debited to P&L. Fixed assets debited to P&L is absolutely not allowed, because in P&L only revenue expenditure should be there, and in expenditure, in business expense also, only revenue expenditures are allowed. But friends, for fixed asset, you are definitely going to get depreciation, right? So what are you supposed to do is, this is an intangible asset, this is not allowed, but there is a hidden adjustment in this, and the hidden adjustment is about depreciation. Friends, tell me, what is the rate of depreciation for intangible asset? Can you remember? The rate of depreciation for intangible asset is 25%. So, you know, friends, what are you supposed to do? This 10 lakh rupees debited is a capital expenditure. This is not allowed. But this 25% depreciation is an hidden adjustment, and it should be AUBE. AUBE? So, what is AUBE? AUBE is allowed but unrecorded business expense. See, on the debit side, they have given you full capital expenditure, but you cannot claim full capital expenditure as business expense, but you can definitely claim depreciation, right? So 10 lakh would be not allowed. This 10 lakh would be not allowed, but the depreciation portion of that would be treated as unrecorded business expense. Now, next point is also very important, very tricky. Dividend received from a foreign company. So friends, we know dividend is income from other sources. So dividend received from foreign companies, income from other sources. Now the next part is very, very tricky and very, very important. 2,500 was spent on earning this income. Now friends, if you remember your income from other sources, dividend income, from dividend income, you can deduct only one expense, which is interest on loan. Now over here, they have not specified the nature of the expenditure. They have just said 2,500 was spent. But what is this 2,500? It is not given that it was interest on loan, right? So it may be consultancy, maybe bank charges. We don't know what is this 2,500, but definitely not interest on loan. Now friends, this 2,500 will not be allowed as a reduction from this dividend income, right? So in income from other sources, this would be rupees 30,000. I think till here everything is very normal, everything is like, very casual information. But friends, what they have given in the data is the net profit is 6 lakh after debiting and crediting the following items. It means if dividend income is credited, then this expenditure for earning this income must have been debited. I repeat myself. What they have given in the question is that the net profit is after debiting and crediting the following items. It means whatever is given in C is either debited or credited. So if it is an expense, if it is an income, it must have been credited. So this 30,000 rupees must have been credited, but this 2,500 expense must have been debited, right friends? So even this 2,500 would be treated as disallowed expense. This is something which is very, very important. Many of the time I have seen my students in my test series, they are writing disallowed income, or you can say non-business income. This they are giving a correct effect. They are also not deducting this 2,500 as an expense. That is also a correct effect. But they are forgetting that if something is debited to P&L, then this is not an expense which is related to business, right? This is an expense which is related to income from other sources. So if this expense which is not related to your business is debited to your P&L, then it must be disallowed. So what are you supposed to do is, this is not your business income. So this will go to non-business items. This will go to non-business items. But this 2,500, that would also be a disallowed expense, right? I'll show you the presentation. We are going to solve the sum over here. See, what I have done is I have just kept the format ready. I have not written any amount in the format. So in the first lecture also we did the same thing, right? We did the entire sum together. So I am not writing any amount over here, but this is an explanation which is something which is very, very important, that you have to understand if something is credited, then something is debited also. So this is related to EFOS, the income is related to EFOS, the expense is also related to EFOS. It is not related to business, and that is why this would be not allowed. Provision for gratuity 5 lakh. Now see, if amount is contributed to approved gratuity fund, that is allowed under 36(1). But this is not given approved gratuity fund. They have just said provision for gratuity. So friends, any provisions, any reserves are not allowed. Now, if my CA final students are also, listening to this video, if they are also, studying from here, then they know that there are few provisions in final CA which are allowed if they are as per, those ICDS. But as far as CA Inter is concerned, provisions and all are not allowed. But provision for gratuity is not allowed, but actual gratuity paid. See, provision and reserves is not allowed, but actually what the gratuity is paid is a business expense. So actual gratuity paid should be allowed. But see, what they have done is, the actual gratuity paid 1,50,000 is not debited to P&L, it is debited to this provision account. The total provision is 5 lakh. The total provision is how much? 5 lakh. But out of this 5 lakh rupees, 1,50,000 is the actual gratuity paid, what they are saying. So actual gratuity paid should be allowed, na? Only the provision amount should not be allowed, correct? So the provision amount will not be allowed. The provision amount would be not be allowed. So this 3,50,000 will not be allowed. But 1,50,000, which is a gratuity amount, which is actually expenditure of the current year, that would be allowed. Then depreciation on tangible fixed asset. Any depreciation debited to P&L is not allowed, because we assume that it is as per the books of accounts. Then 7,50,000 paid to a university approved and notified under section 35. Friends, whenever you are supposed to solve the sum as per both the regimes, whenever you are supposed to solve the sum as per both the regimes, then there is a confusion among the students as to which regime we should start solving the sum first. We should solve as per 115 BAC or as per shifting out. See, my suggestion is, always solve the sum as per the long cut method first, which is shifting out of the 115 BAC. Correct. So if you shift out of the 115 BAC, this is allowed. Yes, when we solve the sum as per 115 BAC, see, we are also going to solve this sum as per 115 BAC, which is the default tax regime. So in default tax regime, donation to scientific research is not allowed. But if shifting out of 115 BSc is concerned, then any donation made to scientific research is also allowed. Then friends, we are going for additional information. See, whenever they give you the information in such a matter, in such a manner, after debiting and crediting, this means the information which is given from A to F is either debited or credited. But now they have given additional information. Friends, additional information means this is not has been debited or credited to P&L. This is something which is other than debit and credit, the other information. Correct. So now we have to analyze. So all these things which we are doing now, all this is unrecorded. All right. See what is given in the question. GST of 35,000 pertaining to 24-25. Wait. We are solving all the sums for 25-26. They have given an information which is related to last year. GST of 35,000 pertaining to 24-25 means last year was paid on 10 December of this year. Now friends, why do you think they are giving information of last year? GST paid 35,000 in 25-26. Oh, friends, do you remember 43B? If you remember in 43B, there are few expenses which are allowed only on payment basis. And one of the expenditure in that is taxes. Taxes are allowed as a deduction only in the year in which they are paid. So friends, whenever you get such an information, tax, GST, customs duty, then this 43B should be applied. So what they are saying is GST of 35,000 of the last year was paid in this year. So it means if it was of the last year, then in the books of accounts, it must have been debited in the last year only. But we are not finding profit as per accounts. We are finding as per a tax, and as per a tax, it is allowed in the year in which it is paid. It means this would be AUBE. AUBE is allowed but unrecorded business expense. Next, audit fees of rupees 1 lakh was debited to P&L in the last year. See, again they are giving information of last year. They are saying audit fees of 1 lakh was debited to P&L on 31st March 2025. So our year is 25-26. We are finding everything and we are solving sum for 25-26. So they are saying audit fees. They are saying audit fees was debited to the P&L in the last year without deducting TDS. So very important. See, audit fees is paid to a chartered accountant. Chartered accountant is a professional. For a professional, TDS should have been deducted. So for a professional, 194J is applicable. TDS should have been deducted, but they are saying it was debited to the P&L. It was debited to the P&L without deducting TDS. Oh my God. So it means this is something this is something wrong which you have done in the last year. But friends, tell me, even if something wrong is done in the last year, why are they giving this information in the current year? Let us see. Such fees was paid to the auditors in September 25. So it means, friends, this audit fees in the last year was debited to P&L on due basis. Because see, they are saying it was paid in the current year. September 25 is the current year, right? So it was debited in the last year on outstanding basis. So it means it was outstanding in the last year and still without deducting TDS. If you remember, TDS has to be deducted at the time of payment or when the party's account is credited, whichever is earlier. So even if it is debited on outstanding basis, TDS should have been deducted, but they have not. Now what happens when TDS is not deducted? If you remember, 30% expense is not allowed in the last year and 70% is allowed. Now, since no information is given in the question, I am assuming audit fees is payable to someone in India, to a resident only. So what happens when you don't deduct TDS of a resident? 30% is not allowed. So it means in the last year 30% must have not been allowed. But now it is paid in September 25 in the current year after deducting TDS, and it was deposited also in the current year. Friends. See, when TDS is not deducted, 30% expense is not allowed. But you remember, this 30% not allowed is only a temporary disallowance. What do you mean by temporary disallowance? This 30% must have not been allowed in the last year, but it is allowed in the year in which TDS is deducted and the tax is deposited. I repeat once again, 30% is not allowed in the last year. But what is the rule for such type of expenses? This is temporary disallowance. Not allowed in the last year, in the year in which TDS was not deducted, but allowed in the year in which it is paid, or you can say deducted, and the TDS is deposited. So, this 30,000 rupees, which was not allowed in the last year, it would be allowed in this year and given in additional information, friends. So, in this year, it would be allowed but unrecorded business expense. During the year, Miss Nandini purchased 5,000 shares of RK Private Limited of rupees 20 per share. Fair market value of the share was rupees 40 per share. So, assessee is Nandini. She purchased shares 5,000 of a private limited company, and the fair market value is this much. Friends, in additional information, they are giving that the assessee purchased shares of a private limited company. So, buying shares will not attract capital gain, right? When you sell your shares, it will attract capital gain. They are saying purchase 5,000 shares at rupees 20 per share. Fair market value is this much. So, if you purchase shares, then you don't give any effect, right? So, why is this information given in the question? Oh my God, this is deadly information, friends. Friends, if you remember, 56 to 10, purchase of a property at a low price. If you remember the definition of property in 56 to 10, it includes shares. Friends, this is a very important adjustment. I have asked this adjustments to many students, but majority of the students are not able to crack this. This is purchase of property at a low price. See, what happens is there are few adjustments in which you get some hint in the question, but there are few adjustment whose adjustment is very hidden. You have to do a lot of practice and then only you can understand this adjustment. So friends, now this is something which is very important. In additional information, they have given you that shares have been purchased at a low price. So if you remember that if the difference between FMV and the purchase price, if the difference is more than 50,000, it would be taxable. So friends, now see, this is 5,000 shares. Fair market value 40, purchase at 20. This would be income from other sources, friends. And you know how much would be income from other sources? You know how much would be income from other sources? Income from other sources would be 1 lakh rupees. How did I get 1 lakh? 5,000 shares. For each share, they gave 20 rupees, but the market price was 40. So 5,000 into 20 comes to 1 lakh. This difference is more than 50,000. Entire amount would be income from other source. This is very important. See friends, what I have done is, you would appreciate one fact that I am trying to bring such adjustments which are very, very tricky. If you really find all these videos very useful, please like, share, subscribe, comment, so that I also get motivation to bring more and more of such videos, right? So if you see all the adjustment which I have brought, they are very good, very tricky adjustments, correct? Okay, so now depreciation as per the tangible fixed asset is this much. So this will go under AUBE, allowed unrecorded business expense. Now adjustment number 5. A debt of rupees 8 lakh was claimed as bad debts in 22-23, but the AO allowed only rupees 4 lakh as bad debts. In the year 25-26, 3 lakh was recovered ultimately in respect of the debt. The effect of bad debt recovery was not given in the books of accounts. Now, friends, students, this is a very nice adjustment which is not regularly asked in your exams, but this is important. They may ask this adjustment now. See, what they are saying is there was a bad debt recovery of 3 lakh. And the recovery effect is not given in the books of accounts. Now, everyone knows that bad debt recovery is your business income. Now, they have not given the effect of business income in the books of accounts. Even if this sentence was not given, this is something which is given in additional information. So, all right, we would have understood the effect is not given. But friends, this is not that straight and very easy enough. Friends, in the current year, there was a recovery of 3 lakh. So that seems to be very simple. But see, they have given that this bad debts was of the year 22-23. See, whenever they give you information of the past years now, then understand that there might be something very tricky in it. See, many a times past year information is also given to confuse you. So you have to create an ability to understand when is the past year's information bullshit, not important, ignored, and when is the past year's information important. So now what they have said is 8 lakh was a bad debts of the last year, not last year, but 22-23, some past year. But the AO is assessing officer, allowed only 4 lakh as bad debts. Now, why are they giving this information that the total bad debts was 8 lakh, assessing officer allowed only 4 lakh? Why is this information given? So, friends, basically what happens is, whenever such information is given in the question, you have to apply this particular formula in that. So, first I'll tell you what is a formula. First, what we have to do is bad debt recovery of the current year. So, bad debt recovery in 25-26, if you see the data, the bad debt recovery is 3 lakhs. So, first what you have to do is bad debt recovery 3 lakh. I am teaching you the final conclusion, then I will also teach you some logic behind it, okay. Then less bad debts not allowed earlier. Not allowed earlier. Okay, first understand the concept, first understand the answer, then I'll also teach you the logic behind it. Bad debts not allowed earlier means out of 8 lakh, AO allowed only 4 lakh. So it means if 4 lakh is allowed, it means that the balance 4 lakh was not allowed earlier. So out of that 3 lakh, you have to deduct 4 lakh and then you get the taxable amount. But over here, there will be no taxable amount because this is negative. This would be negative 1 lakh, right? So in this year, there would be no taxable bad debt recovery. Now, this is, the final conclusion which I have said, that there will be no bad debt recovery which would be taxable in the current year. But I will also tell you that how this formula is derived and why is this concept, arrived from. How is this concept arrived from? So, friends, I'll give you a very simple example to make you understand this, that how this formula has been derived. Say, for example, in the past, there was an assessee who had a credit sales of 8 lakhs. This is in the past. The credit sales is 8 lakh. Now, as per the assessee, this 8 lakh is now not recoverable, and the assessee feels that the bad debts is 8 lakh. So, that is a loss. And from this particular transaction, there is no profit, no loss. So, the assessee is saying that I made a credit sales of 8 lakh, but I am not going to recover any money from that. So, there is no profit, I will not be paying any taxes. Okay, so understand this concept very well. All right, so 8 lakh is your credit amount. Now 8 lakh is a bad debts. So now sometimes what happens is whenever you claim certain bad debts, the assessing officer is not always convinced with your argument. So if you say that there is a bad debts, the assessing officer will ask you that please give us confirmation, please give us some proof that this is a genuine bad debts. So you have to give documents, you have to prove to the assessing officer that this is genuine bad debts. If you are able to prove it is genuine bad debts, well done. So this is bad debts, it is allowed as a reduction, finished. But sometimes what happens is the assessing officer does not agree with your argument that the bad debts is 8 lakh rupees. Supposingly you tell that the bad debts is 8 lakh, the assessing officer also says, okay, very good, bad debts is 8 lakh, very good, you could not you could not earn, you are not able to earn anything, okay, finished. The concept is over. Now say in future there is a bad debt recovery and there is a bad debt recovery of 8 lakh. So what will the assessing officer say? That there was a bad debts, you claimed the bad debts, I allowed the bad debts, you did not pay any tax, fine, so pay tax now in the current year. Say in 25-26 there is a recovery, so you did not pay any tax in the past, you are supposed to pay tax now, correct? This is something which is simple, right? But supposingly the officer says that no, I will not allow the entire 8 lakh as bad debts. Say for example, I will allow only 7 lakh as bad debts. So officer is not convinced. He says out of the entire sales of 8 lakh which you are claiming as bad debts, the officer says I will allow only 7 lakh. Now friends, what is the meaning of this? That if only 7 lakh is allowed as bad debts, it means credit sales of 1 lakh will still be shown in your profit. And you have to pay tax that on 1 lakh. As per the assessee, this is bad debts, but officer does not agree with you. So it means you have to pay this tax on 1 lakh rupees, correct? Now try to understand this. Now this is something which is very, very important. Now, if the officer says that the bad debts is only 7 lakhs, please pay tax on 1 lakh, and you have paid also. You have paid also. Now in future when you recover 8 lakh rupees, will you pay tax on the entire 8 lakh rupees? No. What will you argue with the officer is that there was a certain bad debts which was not allowed earlier and I was told to pay tax on that amount. So you claimed 8 lakh, but the officer said no, only 7 lakh is allowed, pay tax on 1 lakh. So what is the meaning of not allowed as a deduction earlier? Not allowed as a deduction earlier means on that amount of bad debts you have already paid tax in the past. So now in future when you receive 8 lakh as recovery, you will tell to the officer, now I am not going to pay tax on the entire lakh, on the entire 8 lakh. Now I am going to pay tax only on the 7 lakh amount which you allowed me as a bad debts. So the simple answer is, if bad debts is not allowed earlier, it means it is already taxed in the past. Not allowed earlier means it is already taxed in the past. So over here 4 lakh was not allowed earlier, it means it was already taxed in the past. Now you have recovered only 3 lakh. So now if you have recovered only 3 lakh, this is a negative amount. Then negative amount means there is no taxable recovery in the current year. Now friends, in final CA, sometimes if there is a negative amount, it is treated as bad debts which was not claimed earlier and it is allowed as a reduction. But I am not taking that assumption over here because there is a possibility that you have recovered 3 lakh now. Maybe you will recover another 1, 2, 3 lakh in the future because the total bad debts was 8 lakh, right? So you may still recover some amount in the future. So you know what you do only this much. If there is a negative amount, then there is no taxable bad debt recovery. So in your exam, this is very important. Bad debt recovery in the current year minus bad debts not allowed earlier. If this is some positive amount, then only you consider is at a taxable amount. If this is a positive amount, then only it is a taxable bad debt recovery. All right. So now friends, this was the entire discussion. Now what we are going to do is, now we are going to solve the sum. See, net profit as per PNL is 6 lakh. So let's start solving this sum. See, how many heads of income are there? Income from other sources is there, PGBP is there, salary is not there, house property is not there, capital gain is not there. Okay, so format is already ready. See, this is a format. In, in EFOS, there is purchase of shares at a low price. So you must already be having the PDF. So you can look at the PDF or take a printout. So purchase of shares at a low price. So 5,000 shares into 20. Why 20? Because 20 is the difference. So 1 lakh rupees would be your income from other sources. Then the question says donation to a political party. 10,000. This I have added. This might not be there in your printout, but you add this because I also wanted one chapter 6 reduction also. So donation to political party 10,000. So in 80 GGC you write donation to a political party 10,000. So you get 10,000 over here, correct? Now we are supposed to solve our PGPP. In PGPP the net profit is 6 lakh. So how do you start your PGPP? Net profit 6 lakh. All right. So what you do is you keep a printout with you. From next lecture also, I will also keep a printout so that we don't have to, put the screen up and down again and again. So the net profit is 6 lakh. Now cash payment 25,000. One time license fees 10 lakhs. So see, cash payment 25,000. License fees 10 lakhs. But friends, the benefit of already preparing this format is that you are also able to write this depreciation, right? So depreciation on intangible asset. So the intangible asset is 10 lakhs. Depreciation is 25%. So allowed unrecorded business expense, I call this AUBE, is 2,50,000, correct? Then next, dividend received from a foreign company 30,000 and 25,000 is spent on earning this income. So expense on earning dividend. This is not my business expense. So 25,000 is my expense on earning dividend, and dividend is not my business item. So dividend from foreign company will be 30,000 rupees, correct? Then provision for gratuity 5 lakh, but out of the 5 lakh only 350 is not allowed because the balance 150 is my actually paid. So provision for gratuity 3,50,000 because 1,50,000 is actually paid, so that 150 would be allowed. Then friends, next is depreciation on tangible fixed asset 150. So depreciation is 150. So this is 1,50,000. Then what is the next amount? 750 paid to a university under shifting out is allowed. Then AUBE, GST of 35,000. Very, very important. GST allowed in 25-26 on payment basis. If you want to write, if you remember, you can write as per 43B. If you don't remember the section, never write wrong sections. So I think GST is 35,000, correct? So GST is 35,000. Then yes, audit fees 30,000. Very important. So in this sum, the outlays are very important. Audit fees 30,000. Why only 30,000? Because only 30% was not allowed in the past. So that would be allowed in the current year. Then EFOS adjustment I have already done, correct? Depreciation as per the income tax rule on tangible fixed asset. So the license fees is intangible. This is tangible fixed asset, 1,75,000. So depreciation as per income tax rule 1,75,000. In exam, what you can do is you can leave more space so that it doesn't look bad, right? Then this bad debt recovery, no effect is required in the question. Then donation to political party, the effect is already given. So now we are done with everything. So now you can take your calculator. So now in expense not allowed 25,000 plus 10 lakh, then plus 25,000 plus 3,50,000 plus 1,50,000. So this is going to be 15,50,000, correct? Then this is only 30,000. So this we have to reduce. Then allowed unrecorded business expense 2,50,000 plus 35,000 plus 30,000 plus 1,75,000. This is how much? This is 4,90,000. So that's it. So this is our entire sum. So now what are we supposed to do? 6 lakhs plus 15,50,000 minus 30,000 minus 4,90,000, which is 16,30,000. So our taxable PGBP is 16,30,000. All right. And over here we will write 16,30,000 plus 1 lakh is 1,730 minus 10 is 1,720. So this is a sum which we have done as per our shifting out. Now, as far as default tax regime is concerned, there will be no change as far as EFOS is concerned, right? So EFOS will still remain 1 lakh only. Chapter 6A reduction is not allowed under this default tax regime. As far as PGBP is concerned, what we will do is we will do only reconciliation. So 16,30,000 is the answer as per shifting out. Now, if you remember, there is only one adjustment which was not allowed in 115 BAC, which was that adjustment that was related to this donation to approved university, which was 7,50,000. So this donation for scientific research, this is something, this is an expense which is not allowed in 115 BAC. So expense not allowed means it would be added to this. So donation for scientific research, this is not allowed when you are solving sum as per 115 BAC. So 16,30,000 plus 7,50,000 would be 23,80,000. So 2380 plus 1 lakh is 2480, and the final answer would be 24,80,000. So in chapter 6A, what you can do is you can write not allowed under section 115 BAC. That's it, friends. So this is my another question on the total income series. I hope you have enjoyed it. So this type of lectures are going comparatively for a longer duration. So, for more than 40-45 minutes, these are going, but these are very, very important. And in exams also, this come for 15 marks. So, you can always enjoy the lecture at 1.5x or 2, but my humble suggestion is first complete your entire revision and then only watch these lectures. All right, no if, no but, only but. All the best. Bye bye, everybody.